Hello, everyone. Today I'm going to be discussing retained earnings, which is found on a company's balance sheet. So, retained earnings is a company's cumulative net income after accounting for dividend distributions. And what I mean by cumulative is that the retained earnings line gets carried over every year to the next year. So, a company's ending retained earnings in 2021 will then be carried over to 2022 as their beginning retained earnings, and I'll get to an example of that at the end of the video. And another way to look at retained earnings is to kind of think of it as the leftover profit that a company has from the year. So it's not exactly like net income because it is cumulative, whereas net income is just for a certain period, but it is kind of their leftover profit at the end of the year. And then retained earnings can be used to invest back into the business, pay additional dividends to shareholders, or pay down debt. So these are some of the ways that retained earnings can be used, but otherwise, if a company decides not to use their retained earnings at the end of the year, so their ending retained earnings, then yeah, it just gets carried over to the beginning of the next year. And then the equation for retained earnings, for ending retained earnings, is their beginning retained earnings for them from the beginning of the year, and then adding on their net income for that period, and then subtracting the dividend distributions for that period. Um, so so their net income, if a company does have a net loss, this would be negative, in which case this doesn't always get added. So if a company did have a net loss for a period, then the beginning retained earnings would just subtract their net loss, as well as subtracting their dividends if they were to distribute dividends. So it is possible for a company's retained earnings to be negative if their net income is negative. So in that case, it would be a net loss. And then just a very basic example of kind of how this equation works, just using some numbers down here. So for 2021, let's say a company has beginning retained earnings of $100. So going through the equation, if they had net income for that period for 2021 of $25, they would have $125, and then subtracting their dividends, if they had $50 in dividends that they distributed, we would subtract that 50. So then they would be left with $75 as their ending retained earnings for 2021. And then since retained earnings get carried over every year, that ending $75 would then be the beginning retained earnings for 2022. And then the whole process would repeat itself. So that $75, whatever their net income was for that period, you would add or subtract that if it was a net loss. And then their dividend distributions, you would subtract those, get ending retained earnings for 2022. And then the process would yet again repeat itself for 2023. That ending retained earnings would go up here for 2023's beginning retained earnings. So the cycle just continues with retained earnings. So this retained earnings number gets influenced by pretty much every previous year beforehand, and it's strongly correlated with their net income. So their net income really is a big determination of what a company's retained earnings will be for a year. But yeah, that's one of the biggest differences between retained earnings and net income. Retained earnings is that cumulative number that does depend on every other previous year, and net income just focuses on how a company does in one year with their revenue for that year minus all their expenses for that year. But anyways, I hope you guys enjoyed, and thanks for watching.